From headlines to heartbeats, this is More Than News with Kris Moore. Buckle up for a journey beyond the surface, where we uncover the real stories shaping our world.
Hey there, it's Kris Moore with More Than News podcast. Thanks for joining us today. Well, we are going into a brand new year and people are wondering, what am I going to do with my finances? I don't know about you guys and gals, but the last 4 years for most people and for me have been difficult. Costs have been high. You don't know where to invest your money. What are you going to do? Well, I have an expert to answer all of those questions today. It's Mickey Cargile. He is the owner of Cargile Investments. He's an investment banker and really good at it. So let's get started. Mickey, hey, how are you?
Kris, I'm well. How are you today?
Oh, I am so good. Thank you for joining.
My pleasure.
I have been so guilty. I've not been doing the Google, but I've been doing the YouTube, trying to figure out what is going to happen with stocks next year, what is going to happen with investments. Since we've got this election, we've got a new president coming in, we're going back to the conservative values. So I asked you if you would please come in and guide me along with everybody that is watching and listening today. So first, tell me a little bit about your credentials.
Well, Kris, I've got almost 50 years in the business of advising clients on how to invest their money. And, that entire time has been spent here in Midland, Texas, but we have clients throughout the United States. And it's been a good ride for me. I expect to continue it for quite a while.
Wonderful. You have a certain, what is it called? Where's your Cargile investment thing? You have a group that can invest with you, and it's called something that's doing really well. Explain that.
Well, all of our clients are under our umbrella of investment. We are investment advisors. And so we house most of our accounts at Charles Schwab. We have some at Fidelity. And within those brokerage accounts, our clients rely on us to invest their money with discretion. And so we make the decisions for them on what they should buy and how much they should put in it. But each portfolio is customized for each client. So we don't have just a cookie cutter that everyone falls in this box. We actually buy things that are suited for each individual client.
I love that. Okay, so I have another question, and that is, what is going to happen in 2025 since we're under a new president?
Predict the future. Well, the election has created some euphoria in the market. We're seeing the stock market go up. Of course, we've seen Bitcoin run. The price of gold has increased a little bit. So all of those things are a reflection of what's expected from the new president whenever he takes office. We expect that there will be some cut in bureaucracy, which will improve the profits of corporations. We expect a business-friendly environment as opposed to what we've had the past few years, which is a lot of regulation and kind of anti-business sentiment. And so those things will work to drive corporate profits. And more than that, it's a renewed optimism. And so I think you're going to see a lot of new businesses spring up. Because that is the way American capitalism works.
Well, what I really liked was the first time ever Donald Trump opened up the stock exchange. I think the last time they had him was under Reagan. Is that not correct?
I'm not sure who was the last one to do that, but it was certainly exciting.
So if that doesn't show positivity for folks that are wanting to continue their investments and feel safe with their investments. Now, you mentioned that you customize every investment, whether it's an individual or a company. So is there a magic amount of money that you need to invest?
Well, if you're starting investing, you can invest almost any amount now because all of the brokerage houses have something that's called fractional ownership. So you don't have to buy an entire share of stock. You can buy a piece of a share of stock. You could invest, if you wanted to, $5. And there's no commission on that. So it really encourages the small investor to get involved. When I first started in the business, you couldn't buy, or you didn't want to buy fewer than 100 shares of a stock. Well, now you don't have that kind of restriction on you. And of course, the no commission thing is big as well. To engage services like I have, to have an investment advisor, you probably should have about $100,000 to invest. I'm not saying that you can't invest less than that, but that's the price where it really starts being an advantage for you.
Now, here's another question for you as a investment banker. So you know how much all the stocks cost. How much does estimate, I know it changes, how much does one stock of Amazon cost?
Kris, I'm sorry, I don't know the individual price of Amazon, but again, you can invest any amount that you want. So if you wanted to invest $1,000, you could invest that in Amazon.
Well, I know they're very, very expensive. I've had that number in front of me. It's in thousands for one stock.
Now, the thing that, if you came to me with that, the thing I would tell you is you don't want to put all your money in one stock. You want to diversify into several different stocks. Now, for most people, diversifying is somewhere between 12 and 20 stocks. If you get more than 20, you can't follow them. You don't really know what they're doing. If you get fewer than 8, then you're taking too much risk. And that's one problem that all investors have today. The market's been very good. Everybody feels extremely confident in their decisions. And because of that, they're taking risk that they don't understand. And all you have to do is look at a stock like Xerox. Xerox was once one of the largest companies in the country. All stocks go through this cycle where they are tremendous and then they're not. We talk about General Electric, Enron. There are many, many stocks that go through this cycle where they're good and then they're not good. And that's why you have to constantly be upgrading your portfolio so that you're not in a stock too long.
Well, this is why it's important to get somebody to advise you. Don't just go out there and say, I like Starbucks. I like whatever brand of shoes. You can't buy with your own loves allies. That's not necessarily what is hot market right now. So it is really good to talk to somebody that does this for a living, that can guide you. There's so many apps right now that you can, I think there's Lobster, I know there's quite a few that you can get involved with, hooks you up, they hook up to your bank account, not going to happen, and then you buy your stocks, but you're buying them without any guidance, and that's not right.
Kris, and thank you for saying that. Be very cautious. In fact, don't hook your bank account up to apps. Don't give anyone your passwords. Yeah.
Not a good idea. No, sir. All right, let's talk, since we have a new president, a very conservative Republican president, let's talk Democrats and some of the many fears that they have. We know these past 8 years have been kind of scary, or 4 years under the Democratic Party for various reasons, but we know that Democrats are scared, and they're scared of tariffs, something that Donald Trump is really working to increase, to Canada, to Mexico. Explain that. Explain what tariff is.
Kris, there's a lot of misinformation about tariffs. One of the big thing about a tariff is that it's a border adjustment tax. What that means is it adjusts the price of imported goods to take out the advantage of slave labor. The reason that we have things made in China and different places is because the cost of labor is so low. And that's the advantage they have over us because we pay a fair wage. So equalizing those prices for wages is a very important thing if we want to build the U.S. manufacturing base. The thing that I hear the Democrats say, of course, they have to be against it because the Republicans want it. But the reason they're against it is they say it's a tax that will increase the cost of the good. Well, the reason that's not true is because you're assuming that Americans will buy it regardless of what it costs. Well, that's not true. If you mark something up 25%, Americans aren't going to buy it. They're going to buy something else. And so they're not going to be able to raise the price of their good to reflect the tariff. The other thing is that the countries are smart and they will adjust their currency so that in U.S. dollars, you won't see the increase in the cost of the good. So this thing that Americans will pay for the tariff is just simply not true. They also say it's a tax, a hidden tax, and that it's inflationary. Well, I don't know where they went to business school, but taxes are not inflationary. They're the opposite. So if you want to say it's a tax, then you'd have to say that Biden's increase of taxes that he proposed was also inflationary, but they never talk about that. So tariffs are not something to be afraid of. They're something that would build U.S. domestic production. And that's a good thing for us. It would bring back the middle class. And if you want to know where the middle class is, they're working at Walmart for $8 an hour.
I hadn't quite thought to Walmart yet, but I could be a breeder for a sauce sale by putting on a pound. Yes.
You know, that will bring back the middle class was the middle management that worked in the factories. So that would bring back U.S. manufacturing. It's a very positive thing.
You look that. Now, we had John Polanco on a couple of weeks ago. He was discussing income tax changes. So I blocked for just a minute to hit on feds, because the feds, that was something that we talked about frequently. The feds rose the interest rate. Now they're continuing. They just recently dropped it another 0.5%.
1/4%.
So why are they doing that? And do you feel like they're going to continue to drop interest rates?
Kris, I think that they're stuck in the 24-hour news cycle, that they feel like they have to constantly be doing something to justify their jobs. And so they're constantly tinkering with the interest rates. Raise it, lower it, raise it, lower it. And this 0.25% change doesn't do anything except generate a news story and let us become obsessive about what's the Fed going to do next. The Fed is being more accommodative. They've come off their tight money policy where they were trying to control inflation. Now they're letting go of some of that money. And so that's another thing that's good for investments in the coming year. They have lowered interest rates some, but they're going to slow down and probably only lower rates another 2 times in 2025, the coming year. And so the thing that I look forward to is somewhat stable interest rates so you can make a plan.
Yeah, they're saying that the housing market is going to become more active in 2025. You're still in your interest rates, and that is going to affect the sale of new homes, because people are still like, I don't know if I'm going to pay. What is it now? 4.25%? What is the interest rate?
On mortgages, 7%. Yeah, so rates may be lower on mortgages a year from now, but they may not. But I don't think they'll go higher. So if you wanted to wait, I think you'd be okay.
I did want to address that. The other thing that I want to talk to you about is Bitcoin, cryptocurrency. You know, have a friend that is very active in that. And I know Bitcoin and cryptocurrency recently has really had a spike, even though I have no idea what it is still. You've explained it to me. Don't understand it. But what do you feel like that as an investment? Even though it has seen some growth, that doesn't mean anything. Can still tempt tomorrow. So what do you feel about that?
Well, different people, depending on what advisor you talk to, has a different opinion on Bitcoin. I don't think it's appropriate for most people. Certainly not my clients. My clients tend to be older, working toward retirement, if not retired. So it's not a suitable investment for them. It's speculative. So if you are a speculator, then maybe Bitcoin is right for you. I'm too conservative for it. It recently hit a high of $107,000.
Right.
It's come back down to $95,000. Who knows where it's going to go next? I have a hard time. I don't know what it's worth, so I can't buy it for people. I can't put a value on it. I don't know why it's worth anything. And, there are several people that feel that way. But nevertheless, you can't ignore the fact that it's gone from 8 cents to $107,000. And you play that game in your mind of, well, if I put $1,000 in it 20 years ago. Yeah, I don't know that it's appropriate for most people. Certainly, if you were going to buy it, I would say probably put no more than 2 or 3% of your portfolio in it.
Okay. All right. So we've covered investment. We've covered tariffs. We've covered interest rates. We've covered cryptocurrency. So now what I want to do is circle back and let's kind of hit on investments again in your advice and what you feel like is going to be trending in 2025.
Well, if you have a good investment strategy, then that really doesn't change for who's the president or what the Fed's doing. So, if you're saving for retirement, keep putting your money in investments, save all you can. I've never had a retiree come to me and say, well, I just saved too much money. I should have had more fun instead of saving all this money. It's usually the opposite. I wish I had saved more. Wish I could go back and talk to my 20-year-old self. So save all you can. A good portfolio is one that has both stocks and safe investments, and that depends on your own risk tolerance. So that's where an advisor can help you. For most people, having about 60% of your money at risk in stocks and about 40% in safe investments, either bonds or CDs, is a good mix of stocks. It is a good mix for you, and then readjust that annually. If the stock market goes down, you put a little bit more money in it. If it goes up, you take a little bit of money off the top. And, over a lifetime, that turns out to be a very good return for you. The stock market seemed high right now, and that's a concern for a lot of people. That's the beauty of American capitalism, because it forces companies to constantly grow their earnings. And that pressure to grow those earnings quarter by quarter, year by year, is what drives stocks higher, because the stock is worth what the company earns. And so, I expect that will continue for a very long time. And I think we're really in a sweet spot for earnings right now.
And I do want to encourage young people to start. You did hit that. My mom never advised me anything financial, and I wish I could circle back to when I was in my 20s and 30s and started investing earlier. So I encourage everyone, even if it is a small amount, whatever you can, start now and then continue to invest throughout your life, 401ks, whatever it is that you choose. But Mickey, if they are wanting to get a hold of you, because anybody can call you for MiniBird. That's the beauty of being a banker, a financial investor. So how do they get a hold of you?
You're welcome to give me a call anytime. You can reach me at 432-617-1394.
And it's Cargile, Mickey Cargile, Cargile Investments, Midland, Texas. I will have all that information down in the comments. So in case you're trying to jot it down, fear not. I will have that available for you if you'd like to get a hold of Mickey. Mickey, thank you so much. This has been very insightful as people are going into 2025 and trying to make wise investments. Talk to somebody that's wise.
Well, Kris, I'm always pleased to be a part of your programming, so thank you.
Well, again, if you are listening or watching us right now, be sure to hit that subscribe button, whether you're on Spotify or YouTube or Apple, whichever platform you chose. Please subscribe, and that way you'll be the first to find out when our next podcast comes. In the meantime, have a blessed day. This is Kris Moore with More Than News.
You've been listening to More Than News with Kris Moore. Join us next time as we continue to dig deeper, ask tougher questions, and bring you the insights that truly matter.